Hello YouTube, this is Jason, aka Junky. Hope this video finds you doing well. This is Thursday, January 25th. This is video number 2 for today. We're going to talk about trading today. This is going to be a real short example. I have a flight at like 5 or 6 o'clock in the morning my time. It's after 10 here, so I need to hurry up and get through this real quick. I'm going to still give you that quality content though. Alright, join our Facebook group. CryptUnite Global, and it's like-minded people coming together talking cryptos. I don't know if I've ever stated this, but our mission kind of is to just do everything that's profitable within crypto. Anything that's crypto related. Like, we may even find opportunities that don't fit exactly what I would consider like starting a business or whatever, but if it pays in Bitcoin, we're going to take a look at it. Anything that can accumulate more Bitcoin or cryptocurrencies for us is something that will get looked at, as long as it's feasible, legal, and profitable. So those are the things we're doing. So join the community, and we spitball ideas all day long within the community. It's very active, so come join. All right, so Bitcoin, it's been meandering around. There's not been a lot of volatility in it. The bot, the trading bot. All right, so it was basically a unanimous decision within the community. The profit trailer was the only bot that got votes. I mean, there were other bots mentioned, but every single person said get the profit trailer. So this is the bot that we're going to purchase. I'll be doing a lot of traveling this week, and the videos may be a little bit limited, so we will purchase this bot this week, and we'll hope to set it up next week and do a video on it. And maybe we'll do a video on the setup as well. I have no idea what I'm doing. I haven't watched any YouTube videos about the bot or seen it in action at all. I'm just going off the word of the people in the community. So it should be fun to see how this turns out. All right, so let's do a quick analysis of Bitcoin price. I tried to pull up the pound dollar pair so that I could use the MetaTrader software on the demo account that I have, because I'm more familiar and comfortable with that software, but the market wasn't doing the right stuff for teaching. Like, it's at a point where I wouldn't even trade it because there's just nothing to trade. It's breaking out, and breakouts are typically around 10% of the time in the market you have a breakout. So for me, they're untradeable. I don't have a strategy. I would have to already have been into a trade and catch the breakout, but I can't trade a breakout. I don't have a momentum-based strategy, so I just stay away from them. So this is the 10% of the market where I just, close up the computer and go do something else for the day. All right, but okay, so let's do Bitcoin versus dollar here. And we're going to make this pretty quick. All right, so the key is you want to do what they call a top-down analysis. And what that means is you want to go to the highest time frame that's relevant, and you want to plot a map. And there's very key points. Now, I typically start with a weekly chart. Now, this is kind of a little bit difficult for me, because when I used to trade in day trade, I would trade with multiple screens. So, and the reason why that's important, and a lot of people don't understand this, the reason that multiple screens are important is because you can keep perspective of where you are in the price map better with multiple screens, because you don't have to switch between them. So you can leave the weekly chart up on one screen, the daily chart up on another screen, and then you may pick your entries based on a 1 minute, 5 minute, 15 minute, or an hour, chart. But you never lose perspective of where you are. And sometimes when you get in the middle, like in the heat of the trading activity, you can forget to go back and double check yourself against a higher time frame, and to orientate yourself to where you are in the grand scheme of price, right? So, and I'll show you an example of that. So this is the weekly chart for Bitcoin. All right, so we've discussed this in, I think, 2 or 3 videos now about how I feel about this particular section here. So this was the 1st of November. I'm sorry. Yeah, this is the 1st of November. And then, so you had this bearish engulfing pattern, which typically at the top of a move up signals a reversal. Well, it failed, because you have a bullish engulfing candle that engulfed the bearish engulfing candle. And if you don't know what that means, you had homework like a week or 2 ago. Steve Nissen He's the candle guy. You got to read some of his books and understand what these candle patterns mean. All right, but basically, when this failed, price went up for 5 consecutive weeks with no pullback. All right, so this low where price wouldn't go any further is significant. Let's see, that was $5,555.55. Wow, that's an amazing number. That's the actual number. Wow. Okay, so that number, um, it was the low here, and price wouldn't go any lower, and then it went straight up from that point. So if you're going to measure the move, now remember Fibonacci is just a ruler. It's not necessarily the levels are important per se because of the numbers matter. It's basically uh, tracking human reaction historically. There's a price that says we think it's on sale. So think about the logic behind what's happening here. Price was pushed up, 5 straight weeks. The people that bought it, and most likely a lot of them, the reason that this move stops is because a lot of people start taking profits. You hit $20,000. There's a bunch of people that say, you know what, that's enough, that bought all the way throughout this section, and they start selling off. And when they start selling off, it creates sell pressure. Then the people that are speculating think, oh, the end of the run is over. Now I'm going to start selling off. And it's a self-fulfilling prophecy. So these charts, you can get lost in the candles and the up and down movements and the patterns and the fractals and all these different things. But at the end of the day, it's human reaction to things, and it's personified into a chart. So these movements and these numbers, they mean something, and you have to kind of orientate yourself to know what they mean on a bigger scale in the bigger picture, and then find a way to trade that intraday if you're going to day trade. Day trading is very difficult. It'd be a lot excuse me, it'd be a lot easier to look at it and stay, bird's eye view from a longer distance. It's much easier to trade longer time frame charts, to have a higher win percentage, but you're just not in very many trades, which is going to slow down your ROI. All right. So back to my point. I'm sorry, I'm losing my voice here, but so if we measure this move up, however many pips that was, 61%, which is this line right here. Let's put a line there. All right. 61 and 78 are typically pretty important. Those are the sell and buy zones. All right, let's remove the fib. So basically, price came back down to that area, and all the buyers were waiting there. Now, this is a weekly chart. So when I'm looking at this chart, there's a couple things that are key. All right, so the ultimate high is very important. The low that was created down here is important, but I'm not going to plot that line because this is the 61 and this is the 78%. And what that means is this move, I don't know how, let's just say this move was 100 points. It's not. It's a bunch, it's dollars. It's $5,600 up to almost 20,000. So it's almost $15,000 almost. But let's just say it's 100 points just for brevity, just to make my point. Okay, so that was 100 points. The 61% retracement basically just means that it's come back 61 points from the 100-point move. So basically, this is, if this was this would be 39 points higher than here. I hope that makes sense. And what that means is it's on sale. Typically markets aren't going to go up 100 points and then turn right around and go all the way back down 100 points. It typically doesn't work that way. The reason that it moved up like this, those people are waiting for it to go back on sale so they can buy it again. So the direction is up. Okay. So on this chart, this area here is where the buyers are. Now, there's some trickery that happens here. Sometimes they'll let the bottom get put in. They'll let the market start moving, and then they'll wait till a bunch of people put their stop losses down here, and then they'll push the market down and reset the market, take all these stop losses off, and the major players will get in here, and now they get to ride it up, So it's not about being right, it's about when you're right. So that's the thing that trading is all about, the timing, not necessarily the direction. You can get the direction right a lot. It's just the timing of when is the hard part. All right, so here is a buy zone, and buyers came into the market. So we've plotted the all-time high, which is a significant level. We've plotted this low, which is a significant level, and this isn't a swing low yet because this week hasn't completed. To be a swing low, the low of the candle, or the candle, what is this? The shadow. That's the line that comes off of here. It has to be lower than the shadow on both sides of it. And we're still in this week, so you can't count this as the low. However, you can measure the move. All right, so if I'm going to measure this move, and I'm going to show you, well, you know what? I won't do that right now. All right, so these are the levels that are important. You've got this, and you have this buy zone here on the weekly chart. You know, these areas, if you think about this area here, it's been in play for 1, 2, 3, 4, 5, 6 weeks now. So once you plot this on your chart, you know, when it was up here somewhere and it was doing all this before it even got down here, these levels should have been plotted. So you knew when it got down here, you were looking for a reaction. All right, so let's drop down to the daily chart to orientate ourselves a little better. Okay, so here's the first time it came down here and touched it. And this is just watching price action. This is a top-down analysis. All right, so we know this is the area that if I was selling, I would be very weary of selling here. All right, so let's go backwards and see what we would have done in the moment. All right, so I'm going to draw a fib here. So when we hit this high here, this charting software makes it difficult to draw. Like, how do I put my crosshairs at the top if it keeps? Okay. What I'm doing here is after we hit the high, I'm measuring the downward move from the high down to this low right here. All right, and then I just want to make a point here. All right. Okay. I hope I'm not confusing people. So let's back up a little bit just so we can look at this again. This is the weekly chart. This line here represents the high that was made, and this is actually the all-time high for Bitcoin. This area represents the 61 and the 78% retracement levels, which are the areas where the buyers are probably at based on this long move up. Okay, that's off the weekly chart. So now we're dropping down to the daily chart to get closer viewpoints so we can see how we trade it. All right, so when we reach that top, the market came down. Well, this is where markets can get tricky. There's always a price that says you're wrong. So as I would have been plotting this move downward, my Fibonacci would have been on it. I would have put the peak of it here, and I would have been following price until we got a reversal. Okay, now we hadn't got down to the buy zone yet. Buy zone's right here. Okay, so I would have been tracking the fib down to here, and when this low was put in here and then the market went up, I would have left my fib here. Well, that fib would have put the 61% right there where that line is. That's what when I put the fib on the screen a minute ago, that's what I was doing. And this line represents the 61% retracement. Look what happened when it hit that number. Immediately it reacted. And you say, well, it didn't go all the way down here. You're right, it didn't. But this is a daily chart. You can trade this intraday. You could trade this reaction off of the 61 and get into a trade and out of a trade, you know, without having to worry about the price that you're wrong. And let me show you something that's interesting. And this is really going to start making your head spin. All right. Now I'm going to measure the up move from when that one hit the bottom. Chart's getting messy now. Okay, so follow me here. So price went down, came to this area. It hasn't got down to the buy zone from the weekly chart. These are weekly levels. These are super important levels. When price bounces off these levels, you can expect large movements going back the other way. But we're not here yet, okay? Because we're talking about this section here. So price went down, almost went there. It retraced back up. it hit the 61% retracement of this move down and had a reaction. But look at this, the move from down here to up. This line where my crosshair is, and this line represent the 61 and the 78 retracement of this up move. And look at the immediate reaction there. And it went up and made a higher high. Now, I'm going to make your head hurt. I'm going to make your head hurt. Let me clean this chart up. So what do you think this is right here that turned the market again? Well, let's measure it. Oh, I'm sorry, I'm doing this wrong. Software makes it hard. Okay. All right. See what happened again? So of this down move, it bounced up, and that was the first 61 touch. Then it bounced off of the 78 from the up move, and then it went back up. And when it got into the 61 to 78 sell zone again, it went back down. The thing about it is, so I want you to, what I'm trying to get you to understand as you're looking at this is there's always a price that says you're wrong, and you have to orientate yourself to know which move has the next level that you should avoid. I hope you understand that. And your job is to trade in between those levels, because the most predictable sections in the market are at these fib levels. These 61 and 78% trade percent retracement levels are the most predictable areas where you know there's going to be a reaction, and you don't know that the price is going to turn there. Like when it hit this 61 here and went back down, it bounced off of the 61 or the 78 of the up move, but you still could have made money from here to there, and then you could have made money from here to there. And trying to be right isn't necessary. Play the reaction in the highest probable sections of the market. It's all about probabilities. Anyone that's a gambler that's listening, or any type of risk taking, I mean, we're doing it right now in the cryptocurrency space, lending platforms, mining. We're looking for other stuff. It's all about risk tolerance and playing the odds. So I'm not going to get into why we take the trades, what the actual entry points are. And, I left out the time to mark trend lines that will tell you the exact direction of the market basically at all times. I mean, it's probably 90 to 95% accurate as telling you what the direction is. But the main thing is you want to orientate yourself to know where the zones are that you should not be buying into or selling into, and stay in the most profitable, predictably reactable areas of the market. And the fib tool will help you do that, because 61s, and I mean, you can pick any swing on this chart, put a measuring stick on it, like this high right here to this one right here. Take a look at where price reversed. I mean, it's everywhere on your chart. People buy stuff when it goes on sale. There's nothing new about it, and you're wrong sometimes. But the more you do this, and the more you learn how to create the map of price, the better you get at playing between the zones. Okay. I don't know if I taught you a lot right there, but if nothing else, get your Fibonacci tool out, and as you look at swings up and down, measure them in different directions and just pay attention to the price reactions. And it's like Neo in the Matrix. Eventually it will start to make sense. Just keep plotting them in every direction, and eventually it will start to make sense. And then when you combine that with a top-down analysis so that you know where you fit in the grand scheme of price. For example, I wouldn't sell into this. I don't care what happens on the daily chart. I'm not selling into this zone. I'm not, because this is the bigger picture. This is where the buyers are, and there could be a stop hunt to get these stop losses taken out. But I'm not selling into this. I'm looking for all buys here on Bitcoin right now. Once it's in this zone, I'm looking for all buys. So okay, that's not exactly true. I may trade it intraday for a small section of the day. Something I'm going to be in and out the same day, because the direction can be down for the daily area, but right now it's not. Let's look at the direction. I think we're still in that channel. This is the last swing high, and here's the previous swing high. So we've got that working, and we've got this working. So we've got the consolidation of price, and it's like a spring. When it compresses like this, it typically explodes out. The last time we were in one of these was in this section right here, and we got those 2 days where the price went straight down. We fell from, I think, 14 or 15,000 all the way down to 9,000 last time we had this compression, and that was maybe a week and a half ago. So we have the compression again, and we're at the buy area on the weekly chart. So I'm inclined to think that the explosive move breaking out of this compression is going to be to the upside. But we have to be wary with our fibs to know what areas to be wary of. If I'm going to trade this level, I'm concerned here. And here, there's going to be a reaction there. I know it. There's going to be a reaction. 14,194 to 15,438. There's going to be a reaction. Doesn't mean it's going to turn there, because I think the overall direction of the market's going to be up if it breaks out to the upside. But there'll be resistance here. All right. So get your fibs out. Play with your charts. It doesn't matter what market you trade. Any market that has candlesticks and has ebbs and flows and swing lows and swing highs, get your fib tool, attach it to it, and just play around with it, and it'll blow your mind how much price adheres to those levels. And remember, it's not the levels that are important. It's just a ruler. It's human psyche. We buy and sell stuff when it's on sale. It's what we've always done. All right. I hope somebody got something out of this. I'm very tired, and I didn't create kind of like a flow chart for this video. I just kind of winged it. So if I didn't give you good quality, I apologize. I'll do better on the next one. But if you did glean anything from it, good. Like the video, subscribe to the channel, turn your bell notifications on so you know when we make a video. A lot of you, I'm going to see you Saturday at the event. Looking forward to it. My flight leaves in the morning really, really early. So I'm going to go get in the bed, and I'll talk to you guys real soon. Thanks for watching, and have a good night.